So, good afternoon, ladies and gentlemen. My name is Clemens Hillmer, and I am a lawyer, a partner at the law firm Clyde & Co., and I'm based in Hamburg. And I'm very happy to be here. Welcome. And I have the pleasure to moderate the panel Raising Capital in Japan. And the interesting thing is that I was in Shanghai only on Monday, where I moderated a very similar panel, namely Raising Capital in China. So I'm very curious about to hear the answers to my questions today for this panel. But just to summarize the key takeaways from the panel discussion in Shanghai, that was also an owner's discussion, and that was, first of all, Chinese leasing will, of course, remain very, very important. Of course, there was a Chinese panel. And, but there was also the general hope, expectation of the ship owners that this conflict, this trade conflict, will maybe not go on forever, but that will be settled within the next 3 to 6 months. So we will see what is going to happen on that. But in any event, there was a very clear view on the fact that the portfolio is to be diversified. Yeah? And then, of course, my next question was, what is about Japan? And Japan was very, very high on the agenda of the international owners. So, and I think there's also another point which I observed here. When looking at the German participants here at this conference in Tokyo, I think the participation rate has been increased by 1,000%. Yeah? So I think that is also a very interesting observation and shows the growing interest of European owners here in Japan. I have now the great pleasure to introduce you to my esteemed panelists, starting here directly from to my left, Sören Bibow, CFO at Harren Group, followed by Stephen Majeski, Managing Director at Hayfin, based in New York. Then we have Marco Fiori, CEO at Premuda, SPA in Italy. And last but not least, Stavros Gyftakis, CFO from Seanergy Maritime Holdings Corporation and United Maritime Corporation. So just to start with, Japan, of course, plays a vital, essential role in international ship financing. And my first question would be to you, Sören, what is your share of Japanese financing in your whole portfolio in terms of percentage and what is being financed in which way?
Mm-hmm. Yeah, first of all, thank you. And interesting that you first go to China and then come to Japan, but okay. Harren Group, one of our major investments is SL Heavy Lift, a company operating in the heavy lift purpose market. There we are strongly focusing on the energy transition. If you would have asked me last year, so how big is your impact in Japanese, I would very strongly elaborate about our good relationships to the Japanese market on the operational side with the large corporates and with all the transports that we are doing here out of Japan. So Japan for SAL and for the JSI Alliance together with our friends in Jumbo Maritime is a very important market for decades. But financial-wise, last year, my answer would have been 0. So now I'm on the panel, so for sure something has changed. We were introduced beginning of the year to a lot of very interesting partners here in Japan, and also explaining from where SAL is coming and where we are going and where our focuses are. And we met I think, a very good match of the interest in business models. So within only 9 months, I have to say, we have changed from 0 to nearly 50% of financing with Japan partners, and looking into the path of the company and the further growth of the company. We have grown in the last 5 years from 25 vessels to nearly 70 vessels. For sure, I do have the feeling this is just the beginning of a very, very, very nice relationship with very good partners.
Thank you. Very impressive. Stephen?
Yes. Just to start off with just a little background. Hayfin is a European asset manager based in London. It was founded in 2009 and is focused on the private assets, so it's private credit and private equity. So we have a family of funds that raises capital in both those disciplines. I think it's important to think about Hayfin as a whole, and then on the maritime side, where I sit, on the maritime side. On a corporate basis, we've been expanding our global footprint. Several years back, we opened an office in Tokyo, purpose of raising institutional capital for our entire family of funds. That's been quite successful. We have a team of 3 people sitting here, and we continue to expand our investor base at the corporate level with institutional money. That's corporate pension, public pension, banks, insurance companies. I think from the maritime perspective, where I sit, we've been developing commercial relationships in Japan for several years now. 2 years ago, we placed a new building order with Oshima Shipbuilding for some post-Panamax vessels that deliver next year. We have those vessels going on long-term charters with a Japanese energy company. And it's come time to expand our relationship on the capital side as well in raising debt. So we've just started this year raising capital on the debt side through sale-leaseback transactions, focused on, first of all, the new buildings that we have delivering next year, as well as some other secondhand purchases we've made. But certainly expect that Japanese capital will be a critical part of our capitalization strategy going forward. Just given the competitive nature of the capital, as well as I think working with the Japanese ship owners, they really understand shipping and they can underwrite it much differently than your traditional Western banks that might be more hamstrung by capital regulations and very stringent underwriting practices they need to follow.
Perfect, thank you. Marco?
Well, I think I first came, the first time in Japan was the end of the 90s, so I've been for over 20 years operating in this market. Probably I've seen probably over 40, 50 sale-leasebacks of all kinds, 50% LTV, 80% LTV, also 100% LTV, so the whole gamut. Long-term TCs with purchase options. We also raised some funds doing, at a certain point, a syndicated loan with Japanese banks. So I think it's a very receptive country. The only thing that I would like a little bit, and I was thinking today what to talk, out of this experience of 25, 30 years, is that I find that in Japan, people have been always very supportive of all of us, but sometimes I think that we have been not helping ourselves, in the sense that what once seemed to be a very easy market to do long-term TCs with purchase options, we find that a lot of Japanese owners today are very resistant to purchase options. Why? Because I think probably some of my colleagues, some of the other operators, just on the basis of a contract that says you can exercise a purchase option anytime you want after year 3, year 4, year 5, whatever you want, and they're going to respect it. I think we lost a little bit the contact that sometimes these, and I call them partners in Japan, count very much on these transactions to diminish their fiscal footprint. And we cause for them a great damage coming at just point to say, you know what, I give you 3 months notice, your fiscal year closes in 4 months, but 1 month before you close your fiscal year, we're going to exercise this option and remove this asset from your books. So what I wanted to say, and I don't know if somebody agrees with me, I think we have to a little bit get more in touch of seeing Japanese supporters, and certainly have been supporters to all of us, more as partners, not just pure providers of debt, and just going on a very strict representation of what is a TC agreement or a sale and leaseback agreement. I think what I really incentivate is that let's talk to each other, let's try to be more flexible, because at the end of the day, few people risk to spoil this market for all of us. So I think a certain attention, somebody's been operating here for over 25, 30 years, I think is the only warning that I would like to do. About that, I think it's been a great market. We've been supported by Japanese when no European bank would have supported us, when we started in Premuda and the turnaround. So, what can I say? Thank you to everybody, but let's not screw it up. That's my only thing that I would like to say.
Stavros?
Hello, minasan konnichiwa to everyone. Thank you very much for being here. And a great thanks to Mats and Moritz in the previous panel for making this amazing pass, supporting Cape sizes. I represent Seanergy Maritime. We are a pure play Cape size player. Whoever wants a decent undervalue exposure in Capes and overperformance, the ticker is SHIP, SHIP. So we have opened the company up in Japan, doing Japanese financings over the last 5 years. We have done mainly sale and leasebacks. We have not tapped the JOLCO market or the local mortgage-backed financing, be it by one of the mega banks or the smaller financial institutions. I think that the sale and leaseback agreements here with local owners supported by their local banks is a more suitable product for us. It provides flexibility at a decent price. It's not the cheapest product, but still, given the flexibility and the leverage that it provides, it's very, very suitably priced, I would say. So around 25% of the fleet of Seanergy Maritime is financed through Japanese sale and leasebacks, and around 40% of the fleet of United Maritime. JOLCOs we haven't done yet, exactly for the reasons that Marco alluded previously. It's a very closed and flexible product. I understand that the sensitivities around calling the financing earlier or calling the purchase option earlier than the contractual maturity. At the same time, we are operating in the most liquid sector in terms of S&P across the shipping facilities. That being said, we are not asset players. We are long-term players. We have not called yet any of the financings that we have done. And then when it comes to Japanese banks, mortgage debt providers, we are spoiled by the Greek lenders, where we see very much similar terms in similar structures. I mean, long profiles, a bit more conservative loan-to-values, but also very similarly priced. But Japanese sale and leasebacks have been a very important and integral part of our capital structure and will continue to be in the future.
Thank you. Very interesting. Now, also seeing here a wave of a tsunami of new challenges, USTR port fees, Chinese countermeasures. Stavros, you just mentioned that the percentage of Japanese financing amounts to 25/40%. How much is Chinese leasing? How much does the Chinese leasing part? How much is that?
The Seanergy, which is a pure play Cape-size company, is not affected by USTR. So we very rare have port calls in the US. So we do have some Chinese sale and leasebacks on the Seanergy side. Around 25% of the fleet is financed by Chinese leasing companies. United is a more sensitive story because United has Panamax and Kamsarmaxes, so there's no Chinese sale and leasebacks on the United front. All the vessels are built in Japan, so there's not much Chinese element there. But Clemens, USTR and the Chinese port fees is only a very, very small, maybe a small part of the puzzle of the challenges that we have been facing in shipping over the last 5 years. We have been called to operate through pandemics, through wars, through tariffs, through port fees, implement new environmental regulations, EU ETS, now Fuel EU, install scrubbers, install ballast water treatments on the systems. It's just not getting easier for shipping these days. Whereas we are responsible for transporting 90% of goods through sea, and instead of bodies and governments making our life easier, they keep making it more challenging for us to continue operating smoothly and to survive.
Well, if they made it easier, it would not be as fun as it is. But anyhow, that's another story, But no, on the Chinese leases, look, I think the Chinese leases has been a great. I don't have a lot of experience with it, probably zero. As I told you, mainly was the Japanese market. But I understand that today everybody, unless the case of Capes, where you're not exposed to these kind of things, or other segments, I think everybody's kind of concerned of walking a very thin line. Here you have to walk this very thin line of not hurting anybody's sensitivity or not trying to incur in anybody's problems. So, some people try to avoid causing problems in America, other people in China. I think the Japanese route, in that respect, I think has been kind of positive. And as a matter of fact, from what I hear, there's been a big race to refinance a lot of Chinese exposure into Japan. So that has been making things a little bit more competitive. But for sure, I think China has been a little bit left behind, at least in this moment for those reasons. I think it's been a little bit a race to safety, a little bit.
I agree with that. The only thing which is a bit like a question mark is that the Chinese sale and leasebacks historically have been more of a corporate volume-driven kind of lending. You have the owners used to order 10 plus 10 plus 10 and then go to the lessors and receive the check, finance 85% of the 30 ships. Whereas Japan, and especially the sale and leaseback, is a more kind of a relationship thing whereby you do one ship with a local bank or maybe you do 2 ships. So the only question mark is, is there sufficient capacity here in Japan to replace what the Chinese have lended in the market over the last, 10, 15 years? That's a big question mark for me.
Right. Of course, we don't want to speak too much about China. But also maybe one question in relation to that, and maybe you show me your opinion by show of hands. Do you think that now all these troubles with the U.S. port fees, is it just, will we be back to business in, let's say, 6 months? Yeah, back to usual business, or is now a long-term conflict we are facing? We are saying, okay, we must now really restructure our financings. So what do you think? Back to business is in 6 months? Who thinks that?
Well, I can tell you in 3 years, probably when this
3 months.
finish 6 months, I'm not sure.
So, Marco,
more of a chance.
Steven,
we're all looking forward for these three years to finish.
I think it's a lot of it's posturing.
Yeah.
I think shipping is a small part of the trade disputes and the items that need to be discussed between China and the U.S. that need to be worked out. So I think it's just posturing and getting ready for a bigger negotiation that involves much more critical points than just shipping and port fees. So I think it's just noise at this point.
Yeah, I think maybe to add, SAL has an affiliate, Intermarine. That's an operator, MPP operator out of Houston, servicing the Inter-Americas business. And for sure, we see huge effects, especially in the Inter-America trades. There is not so much, we're always thinking about, okay, if I enter with my big ship in a US port and then I have to pay this $1 million fine, okay, that's somehow, frankly speaking, for a large container ship manageable, for a large bulker manageable. But if you consider what the tariffs are adding to countries like Chile or Brazil, these are huge effects. And this is things that will harm trades, and this will harm trades not for 6 months, not for 12 months, it will harm it longer. But again, also there, that's manageable. Shipping is always flexible, so what does that mean? Routes will change, you reorganize the vessels where they are going. A lot of vessels, you will change operators, so there will be operators, for example, then excluding US trades. They will probably more focus then on Chinese-built vessels. Others will strongly focus on US trades, so they will be very keen to take over Korean and Japanese vessels. So it's simply, I think, and that's the strength of our markets, is reacting flexible on all those things that happen. I mean, all what Marco just mentioned, coming from all the external effects that we had over the last years. I think one thing our industry proves, we can react, and we can react in a reasonable time.
Okay, thank you.
But you know, I sometimes, you know, probably it's my Italian background, probably I went to school to the Jesuits, who like to answer one question with another question, you know, not to answer directly. I think my question would be, do you realize how has changed the equilibrium in the shipping world? And not for the best, probably. I think today Japan probably is representing between new buildings, between 10 to 15% of new buildings. China over 50, and the rest is Korea, things like that. This was a country probably 40 years ago was doing 70% of the world build. So when you tell me are we going to find an equilibrium, you know, I think there's going to be some push and pull, but then everybody has to face, you know, there was somebody who said you go to war not with the army you would like to have, but with the army you have. So I think when you face these kind of realities, I think Japan will have a very tough period ahead. To increase from this 10-14% to increase construction, and also Korea. So I think China is exercising a very big weight, and I think we accept it, we don't accept it, we like it, we don't like it, but it's a reality. So either we start changing things, and I would be very much favorable to see an increase of the Japanese presence in the world of shipping. But unfortunately, as we speak today, for many reasons, and one of them probably is labor, is not there. So I think probably we should try and help them also on this, because probably was not the old world was not as bad as a lot of people try to paint it today. You know, I think.
Yeah. Thank you very much. Sören, I know that you actually have financed also your portfolio not only through Japanese financing, but also by Chinese financing, Chinese leasing. No?
No.
You didn't?
No, we never had a Chinese leasing structure.
All right, okay. And are there any participants here who have also done Chinese leasing? No one at all? No, Stavros.
Sorry,
The only one.
So, because my
the
question...
small village of Cape sizes, which is not affected by U.S. trades.
Yeah.
We have. I mean, and to be frank, we will continue considering that. Look, we are fans of diversification. Looking at what's happening on the geopolitical front, the way to go forward is diversification. If you were asking me, like, I don't know, 2-3 weeks ago, if you would like to do more with the Chinese, I would say probably, okay, maybe selectively here and there for special projects. After the Chinese port fees, well, I don't exclude refinancing some part of the fleet through the Chinese. So diversification now is key, and being able to pivot between capital resources and change from whatever will make the story more attractive and more suitable to continue trading smoothly, I guess that's how we should be moving forward.
All right. And Stavros, but then one question is, how does then Chinese leasing compares to Japanese leasing? Japanese JOLCOs, SLB, in terms of terms, flexibility, economics?
In terms of economics, in terms of deal origination, it's pretty similar. What you get, I mean, you get, okay, pricing, it fluctuates. Sometimes the Japanese market is more competitive, and it used to be more competitive, especially when the Chinese products were in high demand. Now the Chinese are becoming more competitive because they are lagging behind in demand due to USTR. So in order to countermeasure that, they are basically being a bit more aggressive on pricing. You have the same flexibility in terms of long terms, long profiles, and limited covenant restrictions. So the main difference is what Marco alluded on before, that the Japanese do not want to see the facilities being early prepaid, whereas the Chinese, they are happy to see you prepaying with a respective exit fee. I mean, for them, it's not a matter of deferring any tax liability. It's purely a matter of making the return that they wish. The other difference is that the Chinese, again, take a more corporate approach. They are happy with volumes, whereas the Japanese, they are more there to nurture a relationship which might include other aspects of cooperation other than just doing financings. Commercial cooperation on the equity side, doing joint ventures together, so they can all find their place in the strategy of the company. And for us, we very much like the Japanese approach. I mean, the whole ritual, going through the closing meetings, having the owner that will finance our ships through the sale and leaseback, visiting our office and walking around and getting to understand the business, and over the year getting more educated and more comfortable about our business model. This is something that we like. We very much enjoy. It's part of also our DNA as Greeks.
It's not an easy game that entails coming a lot of times to Japan, having a lot of time them coming to us. But normally it's very nice people. Just to make it a very short comment, in my opinion, the best thing, I don't know Stavros what was saying, is to have a certain number of owners who you deal constantly with them, you talk to them constantly, you know how they're doing, you know what they would like to do, and I guarantee you they're going to be also very flexible in prepayment. If you go to them and say, look, I have a 3-year deal, a 5-year deal, and you can start exercising options at year 3. I'm sure you go, and it's happened to me. You go at year 2, you sit down, you decide for a fee, and said, by the way, look, I prepay you this one, I give you another ship, so you don't leave, we don't leave. You find solutions, but you have to invest in the time of talking to people. We are losing this ability of talking to each other. And it's not only shipping, I think it's in general. We're losing this capacity of talking to each other.
Thank you. And coming to Japanese equity, how do you see Japanese equity? Has anybody of you also entered into joint venture agreements with Japanese investors, trading houses? Any experience with that? Would there be interest for that?
From our perspective, we're attracting Japanese equity via our fund structure.
Yes.
So we're getting direct investments into our funds from, as I mentioned earlier, different institutional capital in Japan. But we do talk to the trading houses. We do talk to some of the larger owners, and it's always something for discussion. Not something we've transacted on, though.
Mm-hmm. Yeah, from our side, firstly, we started in this market with JOLCO structures. They are fit perfectly to our model, simply as we are an operator with own vessels and very long-term view. So normally we build the vessels and keep the vessels till they are scrapped. This inflexibility that was just mentioned is for us actually a benefit and not a negative thing. But for sure, I mean, we are family-owned. We have a strong equity position at the moment. But on the other hand, we also see the need of growth to look deeper into also optionalities here is for sure a thing. As I said, we are just 9 months for my first trip here to Japan, and now I've closed 10 transactions. I would say for sure this is very interesting and to elaborate, but I also know it's not only, everybody says, the Japanese partners needs time to get trust. Frankly speaking, these are our assets. We have a strong family. Also the family needs the trust into a partner to invite for equity investments. So a thing that is for sure interesting, especially how I experienced our first transactions with the partners here. But for sure a long way also, not all from equity side in Japan, also for sure a long way from our side.
Okay.
Well, I think I had only one experience of some kind of partnership in Japan, but not because just happened. With one trading house was 2 ships, 2 MRs, one us and one them, and everything developed well. The ships then were sold. Everybody brought home what they had to bring, but so non-eventful. Probably there's only been one, just because we never thought about doing more or never happened. But I'm sure that number 2, 3, 4, 5 deal would work without a hitch also as number 1, if it happened to occur.
Okay, yeah. Because in these normal joint ventures, with, for example, trading houses, I understand that Japanese investors prefer 50-50, 49-51 investment to avoid to put the company on their balance sheet. So that is something then, which might be of interest for you.
As I said, I mean, these are our vessels. Joint venture has to be well balanced. But one thing for sure, we want to keep control over our business model. Yeah. And our business model is the operation of the vessel. So to put a line to an US equity house, for example, this would not be for us an equity source, because exactly in those moments when you developing a business model and then he sees, okay, he can generate a fast IRR peak by selling after 3 years and then forcing you to something, this, for example, would not fit to the way how we do our business.
Mm-hmm. Perfect.
For us, being a public company, I mean, it gets a bit more complicated, partnering on the equity side. We love our Japanese counterparties too much to drag them into those kind of things. But we would be happy to consider something whereby maybe we take a smaller stake and we don't consolidate, we don't drag them into our burdensome reporting requirements. And of course, if someone wants to sell a ship to us and is a bit more financially savvy and wants part of the consideration in shares, which would ensure that he gets a decent upside on the Capesize market, we are very happy to consider that and team up on that side of the business as well.
Thank you very much. And so maybe to come to an end, what are the lessons learned here from when raising capital in Japan? What are the best ways to position yourself to raise capital here in Japan? What do you think what is important here in Japan? What was well received?
Nicholas said it well this morning when he opened the conference, that time to transact. I think he indicated best case scenario 12 weeks, more likely longer. And having gone through multiple processes this year, raising capital in Japan, I think you need to be patient. Obviously, it takes time, especially when you're building the relationships. That's certainly a lesson learned. But I think it's also important as a ship owner to show that you're a steward of capital, your equity investors, also your debt providers. You have multiple stakeholders, and to show good level of corporate responsibility and how you manage your fleet, both financially, a combination of asset leverage and financial leverage and operating leverage that all needs to be balanced and operate appropriately, both commercially and technically. So I think it's the lessons learned is just to have a collaborative relationship, build that trust, and build that relationship.
Don't be in a hurry. Invest time being here. Talk to people. Show up. Show the flag. Be ready to go out for lunches, dinners. Invite them to see your operations in Europe. I think time and creating a relationship of trust is the basis. Once that is established, there's nothing better than doing business in Japan. So I think
where we summarize it in Seanergy, we say it's CPR, doing business in Japan. Consistency, patience, and respect, and lots of sake drinking capacity.
All right, so Sören, anything
Yeah.
to add from your side?
Anything to add from our side? Maybe as we don't have these liquid assets as our partners here, from my experience, was very important is also to clearly give an idea about your business model today and your business model within the next 10 to 20 years. What for sure, shipping is always a bit complicated, but I think if you want to make a long-term relationship, you also have to give your partners a chance to really understand yourself. I have the feeling that this is really key. Key is that you are open, that you are as a trusted that you receive, you also have to give. And yeah, sure, sake drinking helps, but you should hopefully before explain your deal.
But you know, so I think that a little bit. I think we all agree on this. So first, two things. Number one, let's all try when we talk with our colleagues and things to have these kind of very good principle to expose here, because to be respected, because a lot of people. So number one, and number two, on the fact of long term, I think it's really a time building thing. But I think at the end it pays off incredibly well. You know, look, I can tell you, I was in a turnaround situation when I joined. I left Amica, I joined Premuda, and we had nobody lending us money. We were in a very tough situation. In 6 months, we have raised 60, 70 million through sale-and-leasebacks when there was no European banks lending us money, no Italian banks lending us money, and I think that's an incredible. Badge of trust that these people have.
Yeah, perfect. I think that was very interesting and shows long-term relationship matters here in Japan. I must also say that what I heard today is quite consistent, which was also said on the panel in Shanghai. So, gentlemen, thank you very much for this. Thank you very much, Nicholas. Thank you.
Io ero in